Parag, hi, afternoon. If I could just start off with what really is the core growth story at Rubicon, and how do you plan to deploy the IPO proceeds thereof?
Yeah, hello. Thanks for having me on the show. I think just to give a brief background of Rubicon, Rubicon is a global formulations company with R&D centers across India and North America with manufacturing sites in India. We have been the fastest growing Indian pharmaceutical formulations company across our peers. I think we've grown roughly around 76% CAGR over the FY23 to 35 years. So we are a completely R&D focused and R&D led formulations company, which is with our focus is on the US market, both on the generics and the brand side. So the funds which we are planning to raise via the IPO, I think 500 crores are going to be primary infusion, which are going to be used primarily for debt repayment and pursuing inorganic opportunities. And the rest is OFS to one of the investors, General Atlantic.
Parag, this is Harsh here. Nature of the inorganic expansion you're looking for and geography cohort. Before I come to tariff, that's the big question.
So the inorganic, if you've seen in our history, we have done 5 acquisitions, and most of these have been done for capability and not scale. So the acquisitions we are currently pursuing or looking or reviewing are in the same lines as we planned, as we build our branded business in the US. I think we'll continue to look at things which are synergistic to what we are building there.
Sure. Sure. And how does tariff impact you? Give us some color on that.
Yeah, I know that's a hot question right now. So I think we'll divide the part into two. I think we have two businesses. One is a generics business and the brand business. On the generics business, you've seen that I think US has firstly specified generics as a separate category, both in their deals with EU and Japan. And which kind of clearly gives the guidance that generics currently are exempt from the situation where they are. If you go further into that, I think a part of our revenue or major part of our gross profit is coming from products where we are the only player. And obviously our ability to pass on if in case there were tariffs is very, very significant. We can transmit it to the healthcare system in the United States. But as a management, we continue to evolve our strategy, hedge our risks by various mechanisms to ensure that since US is our major market, we will always remain competitive and agile in the supply chain there. Now, coming to the branded piece, I think there was a tweet by the president regarding tariff on patented and branded drugs. I think post that, I think there's not been clarity which has emerged, but I think in the short term to long term, we are well covered on the 3 products we sell in the United States as branded products.
Parag, the other thing I also wanted to find out about was a lot of approvals in the pipeline from the US FDA for you. Just wanted to understand if there is any sort of timeline that you may have in terms of when the clearances would come in.
So I think we've been having healthy approvals which have come through over the last few years. And I think the rate has continued. I think we kind of got those approvals, over 10 to 15 approvals have continued to come to us every year. And I think that rate continues. And from, I think currently we have 17 products which are under approval with the FDA. And I think we will be able to meet the goal dates or the dates which have been specified by the FDA.
All right, Parag, we'll leave it at that, in fact, for this afternoon. And of course, we'll continue to engage with you in the run-up and during the listing. So great chatting. Thank you.
Thanks for having me on the show.